You've built something real, a real business, real customers, real revenue, real employees counting on you. And there's this thing, this AI thing, that every week seems like it's moving faster and getting closer to your industry. Am I right? You're not sure if it's just hype or if it's real or if the people talking about it have actually ever run a business. I get it. I've been there. My name is Mark Yegge. I've built and operated multiple successful businesses, and I've managed my own wealth, developed my own AI systems, and I've done it without a team of engineers, just smart tools and smart frameworks and relentless focus on what actually moves the needle in a real company. And so, what I'm about to share with you in the next hour or so, probably a lot less than an hour, is the most important presentation I've ever put together. Not because it's about AI, but because it's about your business, specifically the money that's leaking out of it right now because of the gap that you probably don't even see yet. I've brought in someone who's been living this from the inside of the accounting profession. Little tongue in cheek here, but his name is Ben Merrick. He's a CPA, a managing partner, and he spent the last 18 months transforming his own firm using the exact framework that we're going to walk through today. He's also an AI, but I think you'll like him. I'll let Ben take it from here, but stick around. I'll be back at the end with something that I think will change the trajectory of the next decade of your career. So let's go.
Hi, I'm Ben Merrick. I'm a CPA, been in the profession about 25 years now, which puts me right around the middle of a typical career, give or take. I'm 50. I've got a wife I still like, which I'm told is an accomplishment at this stage. 2 kids who are almost out of the house, a firm I built from scratch, and a whole set of problems I really wasn't expecting to have at this point in my life. I want to start with something I think you already know. You just haven't said it out loud yet. The last couple of years have been kind of disorienting. For me, and probably for you too. Look, I spent the first 20 years of my career learning how to be really good at this work. How to read a balance sheet the way a doctor reads an x-ray. How to talk to a panicking client at 11 o'clock at night, the night before a filing deadline, and make them feel like everything's going to be okay, even when I'm not totally sure it is. How to hire. How to fire. How to price the work. How to bill for it. How to keep a firm running through tax season without the whole thing coming apart at the seams. I'm good at all of that. I should be. I've been doing it since I was basically a kid. And then, a couple of years ago, the ground just kind of started moving under me. It started small. You know how these things do. I started noticing my clients were asking me questions I couldn't answer. Not the hard technical stuff. I can still handle the technical stuff. They were asking me about AI, about tools they'd heard about what I thought their competitors were doing, about whether they should hire some kind of data person. And I'm sitting there, across the desk from a guy who is paying me to be the smartest person in the room about his financial life. And I realize, I'm the one who's behind. Not him. Me. That'll wake you up. A few months ago, I was sitting in my kitchen on a Saturday morning, drinking coffee, scrolling on my phone, and I came across a study out of Stanford. Real study, real research, published last year by a professor named Jung-Ho Choi. He looked at 79 small and mid-sized accounting firms that had started using generative AI in their workflow, and he compared them to firms that hadn't. The firms using AI were closing their monthly books 7.5 days faster. They were spending 8.5% less time on back-office processing. And here's the part that really got me. Their reporting was actually more detailed. The AI was making the firms better. I read that, and I just sat there, coffee getting cold. And I'm thinking, so the firms that are already doing this, while I've been sitting here in denial, are closing their books a week and a half faster than I am, and the work is better. That's when I started feeling it in my stomach. A couple of weeks after that, I had a conversation with my wife. We were at the kitchen table on a Sunday night. I was complaining about something. Probably tax season, probably staffing, probably both. And then she put her wine glass down and said something I'm not going to forget. She said, "You know, I've been listening to you complain about the same things for about 3 years now. And every time I ask you what you're going to do about it, you tell me you're thinking about it. I love you, but I don't think you're actually thinking about it. I think you're just hoping it goes away. And the worst part is, she was right. I was hoping it would go away. I had been hoping it would go away for about 2 years at that point, because the alternative, actually doing something about it, felt like too much. I didn't know where to start. I didn't know who to trust. I didn't know if any of this AI stuff was real or if it was all just hype from a bunch of 25-year-olds on YouTube. And the not knowing was just easier than the doing. You probably know exactly what I mean. Around the same time, I started seeing firms in my market I'd never heard of. Small firms, 3 people, sometimes 4, and they were quoting on engagements that used to take 10 of us to deliver, and they were winning some of them. Not because they were cheaper, although they usually were, because they were faster. They were using tools I wasn't using, and my clients, some of them, started to notice. Then I started losing young associates. Not a lot, but enough. And honestly, that one scared me the most, because the talent problem in this profession is already brutal. You've probably seen the number. The Bureau of Labor Statistics put it out a couple years ago. 300,000 accountants and auditors left the profession over a 2-year period. 300,000. That's a 17% drop in the workforce. The biggest drop in 14 years. And the ones who are leaving aren't the slow ones. They're the best ones, the ones with options. When I asked my associates why they were leaving, the answer was always some version of the same thing. They wanted to work somewhere modern. One of them, smart kid, 26 years old, looked me in the eye and said, "Ben, I don't want to spend the next 5 years of my career doing work that an AI can do in 10 seconds, when the firm down the street is letting their associates do real advisory work." She was 26, and she was right. I didn't have a good answer for her. I just nodded and wished her luck. And then, probably the thing that bothered me the most, I started doing the math on my own career. My oldest is in college now. My youngest is a senior in high school. The house is about to get really quiet, really fast. And my wife and I started having the kind of conversations people my age have. What does the next 10 years actually look like? What does the firm look like in 10 years? When do I slow down? When do I sell? Can I sell? What's the firm actually worth right now? And what's it going to be worth then? And I didn't like the answers I was coming up with. Here's the uncomfortable part. And I'm going to say it because I think you need to hear somebody say it out loud. A firm that runs the way most firms run today. A lot of people doing a lot of work that machines can now do in a fraction of the time. That firm isn't worth what it used to be worth. The multiples are going to compress. The buyers who used to buy firms like ours are going to pay less for them, or they're not going to buy them at all, because they'll be able to build something better from scratch using tools that didn't exist 5 years ago. I'm not saying that to scare you. I'm saying it because it's the conversation I had with myself, alone, at my kitchen table, at 11 o'clock at night, on a Tuesday, about 1.5 years ago. The same kitchen table where my wife had told me I was hoping it'd all just go away. And I think you've probably had some version of the same conversation with yourself. You probably haven't said it out loud. I hadn't said it out loud until right now, but I know it's in there. Because I've talked to enough firm owners over the last year to know I'm not the only one having that conversation. So I made a decision, and I want to tell you what the decision was, because it's the reason this video exists, and it's the reason you're watching me right now. I decided I was going to become the accountant who used AI before the accountant who used AI replaced me. That's the sentence I wrote on a piece of paper and stuck on my monitor. It's still there. And it's the sentence that shaped every decision I've made in my practice since. Now I want to tell you the second thing, and this one, you might want to argue with me about. That's fine. I want you to argue with me. That's how you know I'm saying something that actually matters. I think the accounting profession's splitting in two, right now, in real time. And I think it's happening faster than anybody in this profession's willing to admit out loud. Here's what I mean. On one side of the line, you've got a group of firms that are embracing AI. They're smaller right now. Some of them are brand new. Some of them are established firms run by people like us who made the same decision I made and started moving. These firms are using AI across their whole operation: intake, tax prep, review, client communication, advisory work. They're charging more per engagement because they're doing work that firms without AI can't do. They're retaining their young people because the work's interesting. They're pricing on value, not on hours. They're growing revenue without growing headcount, which means their margins are fatter than ours and their owners are sleeping better at night. On the other side, you've got a much larger group of firms that are still running the 2018 playbook. They're using the same software they used 5 years ago. They're doing the same kind of work they did 5 years ago. They're billing the same way they billed 5 years ago. And they're slowly, quietly, starting to feel the pressure. Maybe a client left last year. Maybe their referrals are slower than they used to be. Maybe they lost a proposal to a firm they'd never heard of. Maybe their best associate gave notice and took a job at a place with better tools. These firms aren't dying tomorrow. They're dying in slow motion over the next 5 to 7 years, and most of them don't know it yet. There's no middle ground. I've looked for one. I wanted there to be one, because the middle ground's comfortable, and the middle ground's exactly where I was sitting 2 years ago. Or you're on the side of firms that are going to be commoditized out of the market over the next 5 to 7 years. And I know exactly how that sounds. It sounds dramatic. But the more firms I talk to, and the more I watch what's actually happening in this profession, the more convinced I am that the middle's disappearing. You're either on the side of firms that use AI as a core part of how they work, or you're on the side of firms that are going to be commoditized out of the market over the next 5 to 7 years. And I know exactly how that sounds. It sounds dramatic. It sounds like the kind of thing somebody says when they're about to try to sell you something. And I'm aware that in about 40 minutes I'm going to tell you about a course. So you're probably already a little skeptical right now. Good. Stay skeptical. I'd rather you be skeptical than naive. But I want you to do one thing for me before we go any further. I want you to think about your own firm, not the version of your firm you tell clients about, the real version, the version you know about because you run the place. Think about the last 12 months. Think about how you felt walking in on Monday morning compared to how you felt 24 months ago. Think about your best clients and ask yourself honestly whether you're confident those clients are still going to be your clients 3 years from now. Think about your best associate and ask yourself whether you're confident that person's still going to be on your team 2 years from now. Think about what your firm's going to be worth in 10 years if you keep doing exactly what you're doing right now. And then ask yourself whether the discomfort you might be feeling at this moment is coming from a random place, or whether it's coming from the fact that some part of you already knows what I'm telling you is true. I'm going to stop there, because I didn't come here to lecture you. You didn't click on this video to be lectured at. You came here because something pulled you in. Maybe it was the title, maybe it was the thumbnail. And it's the framework I now use when I help other firm owners think through theirs. It's got 5 layers. Each layer answers a specific question. By the end of this video, you're going to understand what each layer is, why it matters, and exactly where most firms get stuck. You're going to walk away with a clear picture of what a modern AI-powered accounting firm actually looks like. In practice, not in theory. And you're going to be able to make an honest assessment of where your own firm sits today and what it'd take to move forward. You're not going to walk away knowing how to build all of this yourself. I'm not going to insult you by pretending I can teach you that in 40 minutes. What you're going to walk away with is something more valuable than that. You're going to walk away with clarity. And in my experience, clarity's the thing that's missing for most firm owners right now. We don't have a tool problem. We don't have a budget problem. We've got a clarity problem. Nobody's given us a clean way to think about this. I'm going to try to give you one. One more thing before we start. I'm an AI character. And I'm telling you that out loud because it actually matters. Mark built me to be the host of this video. The reason he built me, instead of hiring a human accountant to do this, is the whole point of what we're about to talk about. I'm evidence. If an AI can host a video about the future of your profession, I'm proof that the technology's good enough and the workflows are good enough that a real strategic conversation about the future of an entire profession can be delivered by an AI with a credible face and a credible voice. You can watch me. You can learn from me. You can decide whether what I'm saying's useful to you. And if you're sitting there right now thinking this actually feels like a real conversation with a real person, that's the point. That's exactly the level the technology's at today. If an AI can host a video about the future of your profession, the question you need to ask yourself isn't whether AI's going to change your firm. The question is how much longer you've got before it already has. Okay, let me show you how I think about all of this. What I'm about to show you is called the AIOS, the Artificial Intelligence Operating System for Accounting Firms. It's a 5-layer framework designed specifically for practice owners like you and me. Not for tech companies, not for Fortune 500 enterprises, for the CPA firm, the accounting practice, the financial advisory business that's running on a combination of professional relationships, hard-won expertise, and, if we're honest, more manual process than it should be. 5 layers, sequential. Each one builds on the one before it. And here's what makes this different from every AI presentation you've ever seen. This isn't a tool list. I don't care what your current tech stack looks like. This isn't about replacing your software. This is about diagnosing where the money is leaking and designing a system that puts it back. Let's go through each layer. Layer 1 is called the X-ray, because the first thing a doctor does before they treat anything is get a picture of what's actually happening inside. Most firm owners I talk to think they know where their time goes. They think they know which processes are slow, which clients are high maintenance, which tasks are eating their team alive. They're usually wrong, because when you're inside the business, you're in survival mode. You're putting out the fire in front of you. You don't have the altitude to see the whole landscape. The X-ray changes that. Here's how it works. We conduct a full diagnostic of your practice, layer by layer, and we quantify everything in 2 currencies, dollars and hours. First, the time audit. Where is your team's time actually going? We map every recurring task, estimate the hours, and assign a dollar value based on staff cost. Second, the manual bottleneck scan. Every time a human is doing something a machine could do, that's a leak. We find them. Third, the decision gap analysis. Where are decisions getting delayed, duplicated, or dropped? Where are clients waiting for answers that AI could surface in seconds? Fourth, the revenue opportunity map. Where are you leaving money on the table? Advisory work you're not billing for, services your clients need that you're not offering because you don't have the bandwidth. Your time is worth $300 to $500 an hour, maybe more. Most firm owners I work with are spending 60% of their working week on tasks that are worth $50 an hour or less. If you're billing even 200 hours a month and spending 60% of that on low-value work, you're losing 120 billable hours every single month. At $300 an hour, that's $36,000 a month. $432,000 a year, recoverable. That's what the X-ray finds. Layer 2 is the blueprint. Once you know where the money is leaking, you need an architecture, a designed system, not a pile of subscriptions. This is where most people make their first mistake with AI. They see a tool, they sign up for it, they try to figure out how it fits. Then they see another tool, and another. And 6 months later, they've got 9 different subscriptions that don't talk to each other, a team that's confused about what to use for what, and a technology budget that went up while their efficiency stayed flat. That's not a blueprint, that's a junk drawer. The blueprint is different. It selects the right tools for your specific practice, not the most popular tools, the right ones, and designs a system with sequencing, integration points, and an ROI timeline. When we're done with Layer 2, you know exactly which 4 or 5 tools you're deploying, in what order, how they connect, and what the return looks like over the next 12 months. When we built my blueprint, we identified 4 tools as the core stack: an AI-powered document intelligence platform for client intake, a workflow automation layer to route tasks and trigger alerts, a client communication AI that handles routine outreach, follow-ups, and proactive reporting, and an AI advisory assistant that synthesizes client financial data and surfaces insights for our review. 4 tools, designed to work together, deployed in sequence over 90 days. The ROI timeline said we'd recover the investment by month 4. We recovered it in month 2. Layer 3 is the build. This is the layer nobody talks about, because it's the hard one. Knowing what to deploy is one thing. Actually deploying it, inside a real practice with real clients and real staff who have real habits and real resistance to change, is a completely different challenge. The build is the actual construction of AI workflows, agents, and automations inside your practice, connected to your real data. You don't need to do this yourself. In fact, I'd argue that most practice owners shouldn't, not because it's beyond you intellectually, but because your time is worth too much to spend learning how to configure AI agents when you could be billing advisory hours. What you need to understand is what it does and what it produces. Your team, or a specialist you bring in, does the actual build. The before and after isn't subtle. It's not a 10% efficiency improvement. It's a restructuring of how work flows through your practice. The calibration. And this is the layer that separates the firms who get lasting results from the ones who deploy AI, see some early wins, and then watch performance slowly drift back to where it was. Here's what most people don't understand about AI systems. AI is not set and forget. They drift. Models get updated. Workflows that worked perfectly in January start producing errors in June because something changed upstream. New tools emerge that are better than what you deployed 6 months ago. Your client base evolves. Your service mix changes. An AI system that isn't actively maintained and calibrated will underperform within 90 days. The calibration is a monthly process. You review system performance, not just, is it working? But is it working optimally? You tune the workflows. You update the prompts. You identify new tools that should be incorporated. You retire tools that are no longer pulling their weight. Think of it like your own financial review process. You wouldn't tell a client to set up their investment portfolio and never look at it again. Same principle applies here. The firms that treat AI as a one-time implementation project will plateau. The firms that treat it as an ongoing system that needs attention and refinement, those are the ones that compound. Layer 5 is the moat. This is my favorite layer to talk about, because this is where AI stops being an efficiency play and starts being a growth play. The first 4 layers are about protecting what you have, eliminating leaks, reducing cost, improving margin. All of that is real and valuable, and frankly enough on its own to justify this entire process. But the moat is about what happens when your AI systems are running smoothly and you turn them toward growth. First, the proactive advisory engine. An AI system that monitors your client's financials in real time, not quarterly, not at tax time, but continuously, and surfaces alerts when something requires your attention. You send a proactive note to your client before they even knew there was something to discuss. That's not just great service. That's a relationship that doesn't leave. Second, the content and referral engine. AI-powered content that goes out to your client base and prospects every week. Personalized insights. The AI writes it, you review it, it goes out under your name. You become the most informed advisor in your market without writing a single word yourself. Third, the onboarding advantage. A frictionless AI-powered onboarding experience that makes the first 30 days with your firm feel like working with a firm 10 times your size. Clients don't just stay, they refer. Those 3 elements together? That's a moat, a competitive advantage that deepens over time and is genuinely hard to replicate. So that's the AI OS. 5 layers: diagnostic, architecture, deployment, calibration, competitive advantage, a system. And here's what I want you to understand before we talk about the course. This system will work. Mark and his team built it. He has years of experience building successful businesses in technology, training, and now in AI. I know that there are hundreds of practice owners who need this and need it now. But I get it. Growth can be daunting. You might be scared, skeptical. Busy enough that it's easy to keep saying not yet. Not yet has a cost. Let me show you exactly what I mean. Picture a practice a lot like yours. Mid-size regional firm, good clients, solid reputation. Owner's been at it for 20-something years. And about 9 months ago, she made a decision. Went through the X-ray, found the leaks, built the blueprint, deployed the stack. 9 months ago. Here's what her practice looks like today. Her AI system runs a cross-reference on every active client file on a rolling basis. Flagging depreciation recapture exposures, passive loss carry-forwards that have been sitting unused, entity structure mismatches, payroll classification risks. Things that used to surface only if someone happened to be looking at exactly the right moment. Last month it flagged a client with a pending real estate sale. Depreciation recapture situation that would have hit hard if the transaction closed the way it was structured. She caught it, called the client before he even knew there was something to discuss. His response, "How did you catch that?" She told him her firm had built AI tools into the review process that look across a client's full financial picture. He said, "That's exactly what I've been hoping you'd become." He referred 2 partners from his investment group within 60 days. Now, that's one scenario, but it's a pattern I've watched play out, in different forms, with different details, in practice after practice that goes through this process. The specifics change, the pattern doesn't. AI surfaces something. The advisor brings judgment to it. The client gets something they can't get anywhere else. It's not just the one conversation either. In a practice 9 months into the build, you're seeing this kind of thing regularly. The payroll classification flagged before it becomes a penalty notice. The partnership with a passive loss carry forward that's been sitting untouched for 3 years. The buy-sell agreement structured in a way that's going to create a tax event nobody is planning for. Every one of those starts the same way. The AI does the scanning. You bring the judgment. The client gets something they couldn't get somewhere else. That's the model, and it's straightforward once you've built it. In the practices that go through this process, proactive advisory touches per client go up by roughly 4 times in the first 90 days after the build. 4 times the conversations that matter. 4 times the moments where a client thinks, "I'm glad I'm with this firm," and it compounds. Every year the systems get more refined. Every year the client relationships deepen because you keep showing up with things they didn't ask for. Every year the practice that started 9 months ago is further ahead of the one that's still deciding. So let's talk about what the deciding costs. Let's do some math. Just simple, basic business math. The kind you already know how to do. We established earlier that the average firm owner is losing roughly $36,000 a month in recoverable time. That's conservative. Some practices we could be leaking 2 and 3 times that, and we see that once we run the full X-ray. Let's use 36,000. If you wait 6 months to start this process, you've left $216,000 on the table. Just gone. That's 6 months of compounding you won't get back. But the time leak isn't even the most expensive part of waiting. The most expensive part is what happens to your client relationships. The clients who are quietly watching, the ones who asked you a question about AI and you said, "We're monitoring it." The ones who went to a conference or heard something from a peer or got a call from a younger firm with a slicker pitch. Client attrition is quiet and doesn't announce itself. It just kinda happens. The average lifetime value of a mid-market accounting client is $45,000. Lose 2 clients because your practice feels behind. That's $90,000. Gone. Before you've even noticed the problem. Firms that successfully deploy the AIOS and transition to an advisory-led model see revenue multipliers of 3 to 5 times their starting point. That's a pretty big number, because advisory work is billed differently. It's retainer-based. It's proactive. It's not constrained by tax season. And when AI is handling the work that used to eat your team's time, you finally have the bandwidth to deliver it. I'm not telling you this to pressure you. I'm telling you because I wish someone had shown me this math 2 years earlier. I would have moved faster. I would have stopped waiting for AI to be ready enough and recognized that the cost of waiting was higher than the cost of starting imperfectly. The tool's ready. The framework exists. The only question is whether you're going to use it. So let me tell you what we've built. Everything I just walked you through, the full AIOS framework, applied specifically to accounting practices, is available to you right now in a course called the Accounting AI Playbook. Now, this is not a generic AI course, and it's not a certification program, and it's not another pile of videos about ChatGPT. It's an applied, step-by-step playbook built for practice owners, for people who've already built something real and want to make sure AI makes it stronger, not obsolete. Here's what's inside. 9 modules, about 4.5 hours of content, self-paced, so you work through it when it fits your schedule. Module 1, Vision and the AI-powered firm. What your practice looks like on the other side of this. Module 2, the time audit. We do the X-ray together. You'll walk away with $1 an hour's audit of your own practice. Real numbers, your numbers. Module 3, lead generation and the AI revenue engine, how AI transforms your practice development. Module 4, the cost of waiting. We go deep on the math. You'll build a personalized in-action calculator. Module 5, the AI-powered client onboarding engine, the most visible early win. Module 6, tax season without the bleed. We redesign tax season so it stops feeling like a near-death experience every year. Module 7, the advisory services upgrade, the revenue multiplier module. Module 8, the always-on firm, year-round client communication, proactive alerts, AI-driven retention, and referral systems. Module 9, the firm of one, or few, the vision for the last decade of your career. A 2-day AI conference, if you could find one specifically for accounting practices, which you can't, would run you $2,000 plus travel. And you'd come home with a notebook full of ideas and no implementation roadmap. A consultant engagement to do what this course teaches you to do yourself would start at $10,000 and often run $25,000 to $50,000 for full implementation. The Accounting AI Playbook delivers the same framework, the same diagnostic tools, the same implementation playbooks in self-paced format, on your schedule, for a fraction of that cost. The full value of this program is $1,997. For founding members, the first 100 people who go through this presentation and make a decision, the price is $497. $497. That's one billable hour at your standard rate, maybe two. And it delivers a framework that, if you implement even 30% of what's in it, will recover that investment inside of 30 days. When the first 100 founding member spots are filled, the price goes to $697. After the next 150, it goes to $997 and stays there. Let me anticipate the 3 things you're probably thinking right now. First, I don't have time to take a course right now. Here's the math. 4.5 hours of content. If you do 1 module a week, 1 hour a week, you're through the entire program in 9 weeks. 4.5 hours now. Hundreds of hours recovered every year after. Second, I'm not technical enough to implement AI systems. Neither was I. I'm a CPA. I've been a CPA for 25 years. The Accounting AI Playbook is not a coding course. It's a business strategy and implementation guide. The tools we recommend are no-code or low-code. If you can use Excel, you can implement this. Third, I need to think about it. This one I understand the best. And I also know that I need to think about it is often the most expensive decision a business owner makes. At $36,000 a month in recoverable value, every week of delay costs you $9,000. Think fast. Here's exactly what happens when you enroll. You get instant access to all 9 modules. You also get the full suite of implementation tools, the time audit worksheet, the AI blueprint template, the tool selection guide, the workflow playbooks, and the ROI tracker. You start with Module 1 and the time audit. By the end of Module 2, you'll have a real X-ray of your practice, your own dollars and hours audit, that shows you exactly where the biggest opportunities are. I want to tell you about something that's not available to everyone. Mark mentioned at the start of this presentation that there's a higher level of engagement for the practice owners who want more than a course, who want someone sitting at the head of the table with them as they go through this transformation. It's called the chairman engagement. Mark isn't a consultant in the traditional sense. He comes in as the strategic chairman of your AI transition. He diagnoses, he designs the roadmap, and he sits with you through the critical decisions. His background isn't just AI, it's business strategy, wealth architecture, financial services operations. He sees your practice the way a chairman sees a company. If that's the level of engagement you're looking for, you'll have the opportunity to apply for a strategy call with Mark after you enroll in the course. More on that inside the course. Look, I've been in this profession for 25 years. I've sat across from a lot of business owners, and I know how this moment usually goes. You watch something like this. You think, that makes sense. I should do that. And then you close the browser. You go back to whatever was on your desk before you started watching. 3 months later, somebody asks you about AI and you say, yeah, I've been meaning to look into that. I said some version of that sentence myself for 18 months. There's a saying I keep coming back to. If you always do what you've always done, you'll always get what you've already gotten. And I'll be honest, when I hear that, I feel it. Because the last 2 years of my career have been better than the previous 5. The work is more interesting. The client relationships are deeper. Revenue is up. My team is less burned out. And I'm spending more time on the work I actually trained for. That happened because I made a decision. So here's where we are. $497, 9 modules, 4.5 hours. The framework, the tools, the templates, the roadmap, built specifically for an accounting practice. That's 1 billable hour, maybe 1.5 if you bill on the lower end. If I'd found something like this 2 years ago, I would have handed over $500 without blinking. The cost of not knowing was already compounding in my practice every single day. Here's the honest truth about, I need to think about it. If you close this right now and tell yourself you'll come back to it, you probably won't. And I say that without any judgment, because I know how your brain works. You'll get back to your office. The fires that were burning before you sat down for this will still be burning, and this will feel like one more thing on the list. The decision doesn't get easier. The calendar doesn't clear. The thinking time doesn't appear. What appears is another quarter running the same way. Leaders make the call. You've made harder decisions than this one. You've invested more than this on things that mattered a lot less. Click the link below, enroll. I'll see you inside the course. And if you do the time audit in Module 2 and you can honestly tell me your firm isn't leaking at least 10 times that amount in recoverable value, reach out. I want to hear about it, because in 2 years of working on this, I haven't found a single practice that isn't.
Ben's story is real. Well, almost real. The numbers that he walked you through, though, are real. The situations are real. And the framework that he described, the AIOS, is the same one I've deployed in my own businesses and I've refined over the last several years. Here's what I want to leave you with. You built your practice on the belief that if you did excellent work, showed up for your clients, and stayed ahead of the profession, you'd have something worth protecting. And you were right. And protecting it now just means doing the same thing that you've always done, seeing what others can't see, moving before it's obvious, and investing in the capabilities that separate good firms from great firms. AI is that capability right now, not in 5 years, now. And if you just grab this AI opportunity now, well, you'll be a long way ahead of everyone while they're trying to play catch up. I heard a saying once, and Ben kind of gave it a shot. If you always do what you've always done, you'll always get what you've always gotten. And I believe that is so true. I've tried to live my life around that. Push the edges a little bit. The Accounting AI Playbook is the fastest way to get from where you are to where you need to be. There's founding member pricing, and it won't be here that long. The link is below this video. $497, instant access, and I look forward to seeing you on the inside.